concentrate solely on your career, you can get a long way in your career. And I would say that that's a strategy that a minority of men preferentially do. That's all they do. They work like 70, 80 hours a week. They go flat out on their career. They're staking everything on the small probability of exceptional status in a narrow domain. But it's hard on them. They don't have a life. It's very difficult for them to have a family. They don't know how to take any leisure activity. Like, they get very one-dimensional. Now, it may be that that unidimensionality is the price you have to pay to be exceptional at one thing, right? Because if you're going to be something like a genius level mathematician and you want to do that for, or a scientist say, it's like you're in your lab all the time, you're working 70 hours a week or 80 hours a week, you're smart, you're dedicated, you're unidimensional, and that's how you get to beat all the other people who are doing that. It's the only way. It's like, well, you want to be an outstanding scientist. It's like, okay, really, that's what you want, because that means that's what you do. Because you're competing with other people, you know, they're smart, they're hardworking, and if you want to be at the top, you have to be smarter and work harder than any of them. And working hard means working long hours. I mean, it also means working diligently, but in the final analysis, it's also an additive issue. If I'm smart and hardworking and I can crank out for 70 hours a week, and you do it for 30, it's like, in 2 years, I'm so far ahead of you, you will never, ever catch up. So,
Hello guys, and welcome back to another video. In this video we're going to talk about how I would study for the ICT 2022 mentorship on YouTube. Now, the process of study I'm going to walk you guys through today is what I do every day as an aspiring trader. Even if you're already consistently profitable with the ICT mentorship or whatever method you're using, I think that you should still study this and continue to journal it. As Albert Einstein once put it, once you stop learning, you start dying. And you can relate this to every skill you had to work hard for. An example is achieving a lean, muscular body. So once you achieve a decent amount of muscle mass and your desired body fat percentage, if you stopped following the very steps that led you towards that point, you start backtracking towards your initial starting point. So you stop tracking your calories, so your body fat percentage increases. You stop lifting heavy things, so therefore your muscles lack that stimulus. So why am I relating this to fitness? Well, essentially, when you study and journal in trading, it is very similar to how you're doing reps for an exercise in the gym. So to grow your chest, you must perform bench press consistently every week over time. To grow your back, you must perform pull-ups consistently every week over time. And the muscle we are training in trading is our pattern recognition muscle. So every time we log a new example in our study journal, that's equivalent to us performing 1 rep. And doing that over a period of time, consistently, your pattern recognition muscle is going to be so strong that you'll be able to spot these patterns without thinking about it. Sounds crazy, I know. So, with that being said, I want to give you guys my personal opinion on the ICT 2022 mentorship. And I'm going to approach this from the perspective of what I would have told my younger self who wanted to learn how to trade. So here we go. I believe that everything shown on the YouTube channel, on ICT's YouTube channel, is gold. And the majority of people, and I was one of them, tend to not value free things. So if you paid $50,000 for this mentorship available to you right now, you would literally be writing every single word on paper, putting countless hours in and putting countless effort in, because you paid a lot of money for it. However, if you didn't pay anything for it, you would pretty much overlook its value. But here's the twist, guys. you're not paying with money to learn this, but in fact you are paying something, and you're paying with something that's even more valuable than money, and that's your time. So the main point of this mentorship is to help new traders find an efficient method to put food on the table. It's perfect for finding another source of income, and you can scale this income to whatever heights you want to take it to when you become consistent. So after going through the ICT paid mentorship multiple times, I've realized that everything that was available on the ICT YouTube channel in the beginning was enough to help me build a career in trading. But like I mentioned, since it was free at the time, I simply overlooked its value. But if you put in hours of study and you have faith in the work that's presented to you, after paying with your time, you're going to recognize what you're sitting on is literally gold. And it's amazing how this stuff is available on YouTube. So let's go through some tips and tricks I've personally used that have helped me when learning this skill. And the first one is to become an artist with your logs. When you're journaling these charts, you are creating a reference experience for your future self. So you don't want to create a hard time for your future self, right? You don't want your future self to have a hard time understanding what you have on the chart currently. So keep it very clean and just have things that are useful and salient to the chart at the present time. Okay, so let's say the chart's topic is market structure shifts. You want your charts to focus specifically on market structure shifts and all the supporting ideas around it, like a liquidity pool or higher time frame order flow, all these things that support why the market structure shift should happen, right? But you don't want to have everything on the chart at once, okay? So anyways, this is going to require you to take time to mark the charts out. You don't want to rush it. You don't want to half-ass it. You are creating a masterpiece for yourself in the future. So you want to look back at these charts a year, 3 years, 5 years from now, and you want to be grateful that you put the time into these charts. It would also act as massive inspiration to see how far you've come. So what I do personally is I like to create these separately. I like to create these little textbook booklets, and I'll throw an example on the screen right now as a photo. And I make sure each one of these textbooks have like a specific theme based around it. So like I just mentioned, that specific theme could be market structure shifts. And then the first page would be explaining market structure shifts in my words and Michael's words, or how I summarized it. And it should be a step-by-step walkthrough about how I should go around market structure shifts. And you want it to be very simple so that you could essentially explain it to a 6-year-old. If you can't explain it to a 6-year-old, like Albert Einstein said, you don't understand yourself. So keep it very simple and easy to digest, and then just add a bunch of examples very cleanly, and then literally you have a booklet you could review. You can take it to the coffee shop, you can, while you're eating your breakfast, while you're taking a shit at the toilet, whatever you have, whenever you have a free time, you can just quickly review these booklets instead of having to open up the video and then watch like a whole hour of it. You can quickly review these booklets in like 5 minutes, and they'll keep you up to speed, up to date. And my second tip for you guys is pick yourself a market niche to master and only stick to that for 6 months or a year, right? So a jack of all trades is a master of none. And what I mean by this is, if you're just trying to journal every single pair out there, you're just not going to master any of them, right? You want to stick to a single market niche. And I know there's a plethora of markets out there, but you should only stick to the ones that really correlate together, right? And each market niche has pretty much like 3 trading pairs that correlate together beautifully. So an example is NASDAQ, S&P 500, or the Dow, right? Another example is Australian dollar, New Zealand dollar, and the dollar itself. And the one I do is Euro USD, Pound USD, and the dollar, right? So I'm only journaling my market niche with the Euro, Pound, and the dollar, right? I don't really have the time to journal all these other markets, since I'm treating these 3 pairs like I'm creating a masterpiece out there. I'm treating it like it's a Olympic sport. I want to know these pairs like the back of my hand. I want to know its characteristics, its behaviors. I want to know the repeating phenomenon in these markets that make it unique to other markets. And especially when you're putting a great amount of details in your journals, you won't have enough time in the day to complete 10 trading pairs, right? It takes me personally like 2-3 hours just to carefully journal the dollar, the euro, the pound, and the euro pound. It takes me a great amount of time, a great portion out of my day, just to journal these pairs. My next tip is just to play the long game, okay? Play the long run. So, relating it back to the gym, even if you're putting countless hours in the gym, let's say you're putting 5 hours in the gym, or 10 hours in the gym, you're not gonna get that 6-pack in a week, or 2 weeks, or 3 weeks, maybe 3 weeks, but the point is, play the long run, okay? Play the long run and just be consistent with it over a period of time, and just slowly journal, and don't expect results to happen within the next month or 2 months. It's a gradual process, and over time, you're just gonna figure it out. If you do figure it out in 2-3 months, just know that personally, I think it's not gonna be sustainable, right? And this is not to discourage anyone, but it's just how the cycle of the markets work through a full year. What happens in 3 months is not going to be the exact same that happens in the next 3 months, right? Maybe you've been only making money in a bull run and you've never experienced a bear market before. So what you do in that bear market is you just keep buying the low, buying the low, buying the low. But in the grand scheme of things, that's just experience, and that's why it takes a long time to figure this out, guys. So there's no need to put a lot of pressure on yourself to figure out in 3 months, 4 months, 5 months. It's not going to happen, okay? You're going to get really good at these patterns, that's for sure, right? Because the patterns are not that hard to recognize, but it's just knowing when's a good time to use them, when's the good time not to use them, when to stay at the market, when to go guns blazing in the market. All of this is experience, and only time can give you that experience. So let's say you've been starting for 2 weeks, 3 weeks, 4 weeks, 5 weeks, and you still can't really figure it out, then don't be discouraged, right? It's just like that fat man who goes to the gym for 3 weeks, and then he says, oh, I don't see the results I wanted, so I'm just going to quit. Don't be discouraged, guys. Play the long run. Give yourself a year, give yourself 2 years, give yourself 3 years, and just enjoy yourself in the process, right? Love every single thing about it. Otherwise, it's just going to be living hell for you. And you decide what you want, right? You want to enjoy the process, or, make it a walk in the park, right? Which brings me to my next point, right, is you don't want to be live trading in this time while you're studying, okay? Because let's say, you make a really rookie mistake, but you lost a good chunk of money. That just increases the probability of you quitting when it was unnecessary, right? So, what I'd do if I was completely brand new to this, I'd just stick to logging charts, figuring out the theory, figuring out everything about it, and then just studying hindsight and putting in the chart. And then when that becomes too easy, then I go into demo trading, because you can learn a lot of unnecessary bad habits just from demo trading, right? So you don't want to have any bad habits when you're fresh, okay? So the moment that you're ready and you understand a lot about the markets, and then you understand a trading plan and a trading model, that's when you should be testing in a demo. But you know, you shouldn't be testing things in a demo after studying 1 episode or 2 episodes or 3 episodes. Study the full mentorship, create a backlog of charts, create many booklets, journal, and then when everything is very clear, very understandable, like you know exactly what to do, and that it's that feeling, don't rush it, because that feeling's gonna come. Then when you reach that point, then go into the demo, and then build good habits, manage that account correctly. Don't rush things. Don't try to make 10K days, because it's not realistic. Like, use a realistic leverage, right? Risk 1%. Use a 10K account. Make it as realistic as possible, because you want to build, you want to stimulate it, like you want to create a simulation that it's easily transferable when you do trade live. And then when you do trade live, it's just going to be a walk in the park. But yeah, guys, you don't want to be paying for rookie mistakes that were easily avoidable. Otherwise, it's just going to make the whole process a lot less enjoyable. It's not going to be a walk in the park, and there's a high chance of you just saying, fuck it, I'm not going to do this anymore. When you literally, like, gold is in front of your hands. All you have to do is journal and not use any money until you're comfortable with using it, right? And I'm seriously, this is talking from my experience. I wish like ICT tells all their students, trade demo first or just journal at the beginning. But I just wanted to get rich quick, so what I did was, you know, after 2-3 months of studying, all I did was, okay, I'm ready now. And me rushing things was really counterproductive, because it really extended that growth curve, and it really made me quit a lot of times when, you know, it should have been a walk in the park. So if I was going to talk to my younger self, I'd say, hey man, seriously, stick to journaling. Then when you understand a trade plan and a good model and good risk management, execute those good behaviors, good habits in a demo, so that when you do trade in live, all you have to do is trade, because all those good habits will be already built. My next tip is, when you have a sticking point, just note them and move on, right? And seriously, guys, if you just keep thinking about it, you're just gonna hit like this brick wall. And you know, maybe it's the answers are found in another video or another source or another, you know, series of Michael, but it seriously takes time to resolve your sticking points. And how I resolved some of my sticking points was, I noted them down and I moved on. And then, funny enough, after rewatching the same videos multiple times, these sticking points, they just solve themselves, right? It's kind of weird. I think it's like a blind spot or something, that I just needed some experience in the market to resolve for me. It's funny, guys. It's gonna be very odd, because the answer was just looking straight at you the whole time, but you didn't realize it. But you can't really blame yourself, because it was a blind spot. So if you do have a sticking point, note them, move on, and then just rewatch the videos over and over and over again. It took me like reviewing them like 5-6 times to finally figure it out, and it's literally, it happens in a snap of a finger, and then it's like that aha moment. And the great thing about these sticking points is, you should not view them as like a disadvantage, because the moment that you do push through this sticking point, it literally unlocks like a shit ton of other epiphanies. It just stacks on top of each other. So the sticking point I had was, I didn't really understand the equilibriums and consolidations. And it took me 4 months to have that epiphany moment, and I literally had it in my sleep. Yeah. So the moment I woke up, I jumped out of bed and I quickly wrote it down on a piece of paper. And then the days after that has been amazing, because that one sticking point I had unlocked numerous amounts of epiphanies, which has made my game, my trading, my model have a ton more clarity. And I'm so glad that I pushed through. And I know it's just the beginning. I'm gonna have a lot more sticking points, but once you pass through one sticking point and you push through it, you're just gonna have even more confidence to be able to solve these problems in the future for yourself. So once again, note them, move on, and then continue. Alright guys, so I'm going to walk you through a very detailed note-taking process that would help you guys retain a lot of the things that you're learning. Okay, so step one is to grab a pen and a paper, and it's been proven that when you use a pen and paper, your hand movements engage your brain more. Alright, and the more you engage your brain, the more memory retention there is. Okay, so after that, I want you guys to have 2 pieces of paper, right? And on the first piece of paper, it's just going to be completely dedicated to note taking. Okay, so when you're taking the notes, you're going to have a focus session, right? So make sure you cut out all distractions. Put your phone away, turn off your phone, kick your dog or cat out the room. Just have time to completely focus and dedicate to the video without any distractions. Okay, and the entire time you're watching the video, you're just focusing on the video. You're not thinking about something else. You're just focusing on the video and taking notes on that first piece of paper. Right? So you're gonna write things like examples, definitions, details, dates to keep up with the mentorship, all these, anything that's relevant to the main idea. Okay. On the second piece of paper, what you want to do is you want to have a cue and a summary. So basically what a cue is after you watch the video and you've completely focused on it, okay, you want to start questioning your gaps of knowledge. Okay, so ask questions that target what you've learned. So if you've learned a video on market structure shifts, then ask yourself, okay, why is a market structure shift important? Okay, or if you learned about a fair value gap, then why is a fair value gap important? What is a liquidity pool? All of these things, you need to ask yourself questions that are relevant to what you just learned in the focus section. Okay, then you split that page in half, and then at the bottom you summarize it. Okay, you write down the summary of the main takeaway. Okay, the simpler the better. Okay, you don't want to get lost in the source. Okay, just keep it very simple and detailed, and it just gives you an idea of the concept, like you're just trying to explain it to a 6-year-old. Next, you want to review. Okay, so with these 2 pieces of paper, okay, start going over the questions you wrote on the first piece of the paper, and then try answering them with your notes. Right? So if you get it right, move on to the next question. If you get it wrong, write down the answer again, okay, to re-emphasize and reiterate. Then, once you answer all the questions correct, look at your notes, okay, ask yourself, what are you missing, right? Look at your questions. Can you ask better questions? Look at your summary. Can it be simpler? Review the information until you feel confident in your understanding. And that's pretty much it, guys. That's how you take really good notes on basically in anything, so that you won't forget 50% of what you learned, and so that you use your time more efficiently. Alright guys, so in this portion of the video, I'm going to show you guys exactly how I journal. I like to journal first thing in the morning when my mind's fresh, and I treat it just like an exercise, right? So I wake up, open the charts, and the first thing I do is I just log what happened intraday within the last 24 hours, right? Now, when you're logging things intraday, since price is fractal, you get a lot more examples, right? And maybe you don't understand what price of fractal means at the moment, but the moment you start understanding, for instance, liquidity pool, and then a break in market structure, and then a fair value gap, once you start understanding how these patterns work on the daily chart, then maybe you get more comfortable in seeing it in the 4 hour, and then on the 1 hour, and then on the 5 minute, and then, you know, ultimately you might see it on the 1 minute. And it's absolutely fractal, guys. What happens on the daily, how these candles form, is the exact same way on how they form on the 1 minute. So that's why I like to journal things like what happened the previous day, right? Because all I'm essentially doing is I'm training my eyes to see the pattern recognition. Okay? So before that, we need a platform to journal our trades. So if we go into OneNote, okay? Previously, I did not use OneNote, I used Notion. So Notion's fine, but I like OneNote a lot better now. So when you just downloaded this app, you don't have any notebooks. So what you want to do is right click here, create a new notebook, okay? Then you're going to label that notebook the 2022 mentorship, okay? Then when you have that, click here, okay? And then label this the episode of study, okay? So I already done that here, episode 3. Then you want to go over here and click add page. So it'll add an untitled page. In the layout, I like to do things is, first of all, theory. Okay, so theory is everything I wrote on those 2 pieces of paper. I chuck them into here. If I need to create some diagrams, then I create some diagrams, and I chuck them into here as well. Then those questions are very key for the gaps in knowledge, right? So what you want to do is add another page, and then what you want to do is have specific, like the topics relating to that question specifically here. Okay, so it could have been about fair value gaps. Okay, so what I then do is create a page dedicated to fair value gaps only. Okay, then what I'll then do is create a bunch examples of fair value gaps, and then that's a lot. That's just doing the reps for this exercise, right? So fair value gap exercise, you're doing the reps by finding examples. Liquidity pools, right? You'll find that at certain swing highs and swing lows, it's just going to have better reactions than a regular swing low or swing high, right? So an example of this is we have previous day's highs here. So this is a key liquidity pool you'll mark out on your chart. Why is it key? Because before this sweep here, we had this old daily high here and this old daily high here. Okay, we can also see that it's fairly clean too. Okay, contrast that to this liquidity pool right here. Right, you want to understand, okay, why is this liquidity pool not better than this one, right? And then you want to ask yourself these types of questions, and then sooner or later you'll realize that, okay, I'm looking for a rate on these highs instead of a rate on these highs, right? Because these highs are more significant than these highs. And these are all things you just want to treat like this section as like a lab, right? You want to be like a mad scientist and asking yourself the right questions will get you there with deeper understanding. Okay, So after that, I like to go even more in depth, right? So within the ICT mentorship, I mean the YouTube channel, there's a tons and tons and tons of available resources out here, you should say. So my model is really based on the market maker model, right? So what I would do is everything that I'm learning in the mentorship here, what I then do is I try take it even more in depth and just blend it with here, right? So the type of questions I would be asking is, okay, MF shifts within a market maker sell model. Okay, and then I'll find tons and tons and tons of examples just looking at basically MF shifts in a market maker sell model, just to give me context. Okay, one more you can ask yourself is MF shifts within a classic ICT sell day, right? Or MF shifts within a seek and destroy day. Okay, so all of these are just greater in-depth understanding, and the more you can blend these things together with the available concepts found on his YouTube channel, the greater understanding you're just gonna have when it comes to MF shifts. And this is a really great way of finding wisdom. Okay, I'll add some more, guys, just to spark your curiosity, just to spark I do this with basically a lot of his paid mentorship stuff, and it really has quite challenged, because just watching a video, you're just gonna be left with that, okay? But you really want to challenge yourself to really explore and then basically become a mad scientist with this type of stuff. So some more examples of MF shifts with SMT, right? Sometimes you might see a pair take out, let me draw this out. You might see a correlated market take out a high, then break market structure into the fair value gap, right? And then trade lower. But then on a correlated pair, you might see that it didn't take out a high, broke market structure, left the fair value gap, and that was a sign entry, right? So you're studying the main point, which is an MF shift, and then you're blending that with like different types of conditions like SMT, seek and destroy day, market maker sell model, classic ICT sell day. Okay, or maybe just some, MF shift high time frame for bias. Okay, and then you study each individual like day. For example, here we have let's say we have an MS shift on the daily chart, takes out a high, breaks market structure, hits the fair value gap, and we know that market's going to go down for the next couple of weeks or days. So what you want to do is, okay, that's my bias. You want to go into every 24 days and just study how that day was formed. How was that daily candle formed? Okay, did we open, trade higher, and then trade lower, right? And then you want to study, okay, how do these daily candles form without that framework of an MF shift, liquidity pool, and fair value gap? Is it that clean? Is it that one-sidedness? Okay, so these are all things you could be doing to take it to the extreme level, rather than just watching episode 3 and then just saying, oh, I'm done. Okay, because at the end of the day, you're the only person that's going to be pushing yourself, essentially, right? This guy is not going to be behind your shoulder telling you what to do. Okay, so you need to push yourself to the extreme. Okay, all the answers are found within the video, but push yourself, guys. No one else is going to be doing it for you. And in my personal opinion, a lot of the people that are following the 2022 mentorship, they're going to have to work harder than the people that are in the paid mentorship. And that's because people in the paid mentorship, they have the advantage of weekly videos where Michael actually walks us through the markets. So that's why, for the 30th anniversary, ICT is doing something that's great for you guys. He's actually walking you guys through the indices market, right? And you're gonna have to take advantage of this opportunity, guys, if you really want to have big epiphanies, right? Because once he's explaining it to you and it's happening, the next day, the next week, it's a lot better than just studying in hindsight. So take advantage of this opportunity, guys. Seriously, don't waste it.